Hey guys, I want to take some time today and talk about one of my favorite dividend stocks in this market environment. And that company is Collectors Universe. It trades on the NASDAQ under ticker symbol CLCT. Now, this isn't what you would traditionally consider a dividend company. In fact, it's much smaller than most stocks I usually invest in, and for that reason, most of you will probably not recognize this company at all. But it's a rock solid company. They pay a very good dividend. Um, it's well run. They have the dominant market share, and I think they're going to do pretty well coming out of this market environment. So, just a few quick statistics about this company. Their market cap is 174 million, so very small. Dividend yield is 3.71%. So taking a look at the 1 year chart, they were trading at almost $30. Not too long ago, during the crisis, it fell all the way down to around $13, $14 per share. So a little bit of a background about this company. I believe they were founded in around 1985 in the 1990s, and they have a dominant market share in several markets. They're a grading and authentication company for collectibles. So their biggest market is rare coins. And what they do is they grade rare coins. They're headquartered in, I believe, Long Beach or Newport Beach in California. And they grade these coins based on a sliding scale that they invented themselves. And this provides a lot of liquidity for, and this provides a lot of liquidity for um, coin collectors, because if it's been graded by CLCT, they know that it's been authenticated, it's real, it's not a fake, and it increases liquidity for the market. They also do grading services for trading cards um, and sports memorabilia as well. But the coin market is their largest market. And there's a lot of reasons why I like this stock. But let's talk about the history of the stock as well. Because typically, collectibles like trading cards and rare coins are very susceptible to the economic environment because they're obviously a very discretionary expense. You're not going to be buying any valuable rare coins when the market is tanking and you've lost your job, and you're definitely not going to get them graded in this market as well. So if you look at like the 10-year, 20-year chart of the stock, you'll notice that it's very, very volatile. It blew up during the dot-com crisis. It crashed. It also crashed during the 2008, 2009 crisis, of course, when everybody lost their jobs. And of course, it crashed now again during the coronavirus pandemic. So I think this is a very good opportunity to buy the stock because it's, like I said, very susceptible because of this discretionary nature of the underlying market. Now, in terms of the stock, in terms of the financials, there's a lot to like. And I think it's a very, very safe investment in this market environment. So it's yielding about 3.71% now. I was able to buy some shares a few weeks ago when it was yielding closer to around 5%, 4 or 5%. So if it falls back down to the mid teens range, I'll definitely be a buyer. So there's a few reasons why I like the company. One is like I mentioned before, the dominant market share. They're pretty much the number one leader in most of the markets that they're in, and it's very hard for a new competitor to come into the market because you need a very good reputation in terms of grading. So in terms of the financials, they have a ton of cash on the balance sheets. They have 22.2 million of cash on hand, and they basically have no debt outside of the regular the trade payables. They do have a bit of deferred revenue, but that's it's not traditional debt, interest-bearing debt. They have a market cap of around 174 million, so having 22 million of cash as of the end of December is a pretty good position to be in. And what's great about this business as well is that they are a very capital light business, meaning that you don't need a lot of capital to keep the business running because their best asset is their employees, the graders. So if you look at the capex of the business, they've historically spent very, very little compared on capex compared to their operating cash flow. So in terms of the dividend, I think it's pretty safe to assume that the dividend will be continue to be paid. They've been paying dividends for decades now. The balance sheet is in pristine condition. Lots of cash, almost no debt on their books, dominant market share in the markets that they compete in, and they recently just started. They shut down the grading operations for a few weeks in March and April because of the coronavirus. But they recently put out a press release where they started limited grading operations as well at their headquarters in California. So that should help stem any declines in revenues and profits. Of course, I'm still expecting, revenues and profits to be down at least 50 to 60, maybe even 70% because of the virus. Now, one thing to keep in mind is they do have Asian exposure. It's not a super big percentage of their revenue, but it is a pretty big percentage of their revenue growth. So if you look at the Hong Kong revenue, it's only about 4% of total revenues, but that segment is growing at a significant rate. They started their Hong Kong business not too long ago, but it's been a primary driver of their revenue growth for quite some time. And obviously, Hong Kong has been hit quite hard in China in general with the coronavirus. But they've just recently started regrading operations in that region, so hopefully Q3 will be a little bit better. So overall, I'm a really big fan of Collectors Universe. It's a pretty well-run company. The balance sheet looks pristine. They're paying a very, very high dividend yield that is pretty sustainable, even in this current market environment, and they're not really well known. So right now, the stocks, over the past month or so, the stock has risen pretty significantly since hitting the bottom here in early April. If it falls back a little to the mid-teens range, I'll definitely be a big buyer again. So, have any of you guys heard about Collectors Universe before? If you have, or if you've looked at the stock before, let me know what you guys think in the comments.